All right, good afternoon, everyone, and welcome to our YouTube live stream for the Hot Stock Panel, And this month's theme is Hot Stocks for Swing Trading. So there you go. We're here, myself and three of my most esteemed colleagues, at least one or two of them. It all depends. They're all good guys. We all make up part of the education department, so we're here to impart upon you some of the information that we have for hot stocks. These panels have been amazing. You guys show up in force. You comment on the videos. We appreciate that. And don't forget, especially if you're new to this, don't forget to comment, like, and subscribe, and most of all, to comment. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. It's my pleasure to be alongside of my colleagues here in education. I've been with VectorVest now, and next month will be 16 years. And as you get to know all of us that are up here, we've been all together probably pushing about 50 years together, probably. Easy. That's a lot of information, a lot of experience about utilizing this VectorVest software that you can take away from here. The VectorVest software has been around since 1995, so we're not a fly-by-night company. We've been helping people make money in the market ever since we started, and we're still growing. And it's thanks to you guys listening. That's what it's all about. It's all about helping you guys make money. This is a portfolio and stock analysis system to analyze any of the over 8,200 stocks that we have. We will walk you through a trading plan, knowing when to buy, what to buy, and when to sell. That's what the crux of VectorVest is all about. This hot panel, we do these panels once a month. And it's most likely going to be me, I will host it, and we'll have different instructors appear here to give you different insight to different ways of investing. And even everyone up here invests in the market a little differently, so you get a little bit of a different flavor for everyone's ability to do what we do. Real quick, go through who we have here. Gerry D Ambrosio is here. Steve Chappell is here. Jim Penna is here. And once we get started, they will tell you a little bit about themselves before they get into their picks. And again, big thing, if you like what you see here, do not forget to comment, like, and subscribe. Biggest thing though, comment. This is the only way we can get to know what you want to see more of, what you liked, what you didn't like. You guys have a voice, use it, all right? At the end, we will be giving, we have a giveaway. We're going to give away a VectorVest mug, just like you see each one of us have. Everybody hold up your mug. All right, Gerry, your handle's on the wrong side. Anyway, here's our mug. We're going to all sip from it. That was synchronized. That was synchronized sipping.
It's just water, as far as you know.
It all depends. It all depends on the person. But we're going to give away one of these mugs today, and you have to type in the keyword mug. So I did get the okay. You do type it in the room, and we will pick a random person to win one of these mugs, but you have to type in the room mug. All right? I see the pick ideas on my mobile, and I'm about fantastic. Marie. So we can actually see the chat. So if you say something that we like, we'll repeat it. If we don't like it, we won't repeat it. All right. So anyway, thank you all for being here, and chat in. Please do chat in. And there's the mugs coming in. All right. Make sure keyword mug. All right. Let's get into it. I'm a little bit ahead of schedule, which is outstanding because that's normally not how I run.
Very rare, yes.
It is very rare that I'm ever ahead of time. So I'm a little bit ahead of time, which is a great thing. We're going to start with my picks, all right? I am the host, and we'll get my picks out of the way because I'd rather concentrate on my colleagues' picks a little bit more so that you can get a feel of what they like or don't like. First off, again, my name is Glenn Tompkins, senior instructor, 16 years, just about 16 years. Everything that I've learned about the market, I learned from the VectorVest software. It doesn't make me a guru, it doesn't make me an expert, it just makes me a more informed investor. And that's what we try to get across to you guys. this is why you have a subscription to the software. Or if you are new, this is why you might want to consider having a subscription to the software, and that is something that you all have an opportunity to take advantage of. So the first thing you'll see on our screen is all of the 10 stocks that we've come up with. What?
Someone said you have a great mug, and I said it's not true.
Wow, see, I got haters up here. That's all right. That's all right. Thank you, Claude. I appreciate that. You'll notice the first thing you'll see, we're going to have some fun, I can see that now, is a listing of all of the 10 stocks that we'll be talking about today. So each one of us, 2 of us have 3 picks, and 2 of us have 2 picks. But they all comprise 10 stocks. I want to show you something because, what's your name? Jim? Because Jim brought this up to me. Look at the bottom of the watch list average. The average stock in here has got a relative value of over 1, relative safety over 1, relative timing over 1. So you want to talk about hot stocks. This is what it's all about. We've comprised a really good list of stocks for you. And I'm going to start with the 3 stocks that I'm going to talk about. CPRT. I'm going to also talk about Visa. And if anybody out there knows me, what is the stock that I love the most? It's going to be Apple. So those are going to be my 3 picks from the list. Now, the reason why we put them into a watch list is so that we can quickly analyze them, see if they're under or overvalued, look at their indicators, RV, RS, RT, VST, our core proprietary indicators. If you are new to this, this is something that you definitely want to do. Look at your stocks or put them into a watch list before you do anything. Analyze your stocks. You can analyze them in less than 30 seconds, each stock. All right, so the 3 stocks that I'm going to be looking at are right here. Let's go take a look at those graphs. I'm going to go over to the graphs tab. And we're going to start with, in my case, Visa. So the whole idea this month is to look at stocks to swing trade. The whole idea of swing trading is to be in a stock for a couple of days to a couple of weeks. So I did a lot of the low-hanging fruit. I figure it's easy to find out what's looking good and run with that. But we will analyze the graphs to determine the best opportunities to get in, the best opportunities to get out, and if it's the right time to get in it. All right, first off, equity curve, bottom left, top right. A little bit of sideways move halfway through the graph, but overall the stock is still continuing from its bottom left to upper right trend. Another thing, earnings per share. Earnings is the engine that drives a stock's price higher. Now keep in mind, it's Visa. Just about everybody in the world, or in the country, however you want to look at it, maybe even on the planet. That's the world, isn't it? The planet is the world. Anyway, we'll have,
Last I checked.
Last you checked, good. And the world's not flat. Okay. Everybody's got a credit card of some sort, whether it's a debit card or credit card, but they have either the Visa or the MasterCard logo. It makes sense that Visa is moving up the way that it is. Earnings per share, just growing over that 1-year time period, and earnings is the engine that makes a stock's price grow higher. Another thing that I have on my graph is volume. I want to make sure that not only is the stock moving up, but it's trading, and I do have an average volume, a 40-day moving average of volume, to not only show that the stock's price is moving up, but the volume is moving up and trading for the most part at or above its average volume, which means that not only is the stock going up, but people are definitely investing in the stock. I'm going to put this down to a 3-month. I do have moving averages, a 3 and an 8 exponential moving average. Now you sit and say, well, wait a minute, this is supposed to be the hot stack panel. What is Visa doing? Well, Visa's in a little bit of a channel, right? I've got a red level of support. Why? Because once it breaks down through support, it's normally a bearish move, so I denote that as a bearish move or a red line. But also knowing that the stock is not far from that level of resistance, sitting at 210.13. If you're not in the stock, I would definitely wait for 2 things to happen. 1, I am using 3 and 8 exponential moving averages. I would like to see the stock bounce off of support, number 1. And number 2, like to see the 3 and the 8 start to turn back up, giving me more of a bullish feel. Put those into effect together, you have a higher probability that the stock's price might break above that level of resistance and continue on with its upward move. Now, as far as getting into it now, I would wait. It's right at that level of support. Let's see if that level of support at 198 94 can hold. It's done it a few times. It did it here, here, it bounced here, and now challenging that level of support. But that's a good level, and Gerry likes to use this in a presentation, the best crowd mentality, something along those lines.
The ultimate crowd mentality indicator.
Ultimate crowd mentality indicator. I've liked it. I can't say it the same way he does, but it does make sense. This shows that the stock's got a probability, a good probability of holding here, but if it does fall, you probably don't want to enter it. If you are in it, leave it alone, and this is where the discipline comes in. This is, let that level of support manage the trade for you, but again, overall, like the earnings per share, I like the volume and for the most part, trading at or above that level of average volume. Anybody want to add anything to it?
I would probably wait for it to cross above resistance, personally. I think you're a little too close. You got resistance there at 210, stocks at 200 now. That's about a 5% move. So if you did trade it now, you'd be looking at a 5% initial target gain to resistance. Support is right there, so you got a tight floor, right? You got an initial tight stop at support or just a little bit below support with only about a 5% initial profit target. Tight channel, me personally, I'd just wait for it to go above, cross above resistance.
I agree with Gerry 100%. What I see are lower high pattern in the channel, which is a little concerning to me. It means that there's actually a kind of a pickup on the short side of this market or the selling side of this market, whether that's profit taking or what have you. I think there's no question long term, Visa is absolutely one of the better stocks to think about. So it really comes down to perspective on what your objective is. I, though, with Gerry, would wait for the break of the high of the pattern.
Okay.
I'm going to go a little contrarian here and admit what I would have done. If you take the 3 and 8 off just for a second, Glenn, if I were trading the stock, taking off my retirement hat, that second green, what's the name of that candlestick, Jer? The second one?
Right before, yes?
Don't turn, right, that one.
That's a doji.
Okay, so it hit support. We had a green, an up day, the day after support, the second up day. I would have bought it right there.
Sure.
And I would probably use support as your stop.
That's exactly right. I would have put a stop just below or at that support, but that would have been my entry point, and it would have felt good early today, but then not so much after. But that's how, looking without knowing where it is today, that's where, if I were trading the stock, I would have bought it there.
Yeah.
And good question. Jay brings up Visa or MasterCard. I could have picked either or. I just chose to go with Visa, but both of them, if you look at them, are exuding pretty much the same characteristics.
Yeah.
All right. So let's go to the next stock that I have, and that one would be CPRT in the business service miscellaneous. Let's put this back on a 1-year graph. Again, beautiful equity curve, bottom left, top right, very smooth in the pattern. Not a whole lot of Glenism here, not a whole lot of jaggicity in the graph, and that's the epitome of a good solid stock, especially one to swing trade. Love the earnings per share. Volume is not as prevalent, I'm going to use that word, whether it's a good word or not, it sounds good, as the former stock. It is trading very steadily as far as volume, but really would love to see it above the average volume. But man, price action is just moving. Right now, put this back on a 3-month graph, stock is right at resistance. Look at that, almost, I'm gonna call that in the zone 2, 3, right at resistance today and came back down. But nonetheless, even when it has pulled back before, it's got the resiliency to continue moving higher, thus the reason why I'm using it as a hot stock. All right, anybody want to chime in on that one?
I'll jump in first, and I'll talk about this a little later when I'm up. But CPRT is one of the stocks for. I know there's some names here who are in our Tuesday session, but we do have this as a position in our income portfolio as a buy right, where we bought the stock. I think around 96. We sold the 100 call. Trade's still open. We got a nice profit on it, but very high relative safety number here. Love this stock. Just like Visa, good long-term trade, a good whatever.
Yeah.
Anybody else?
Like the pick better.
Okay.
And a little bit of softness on today's candle, but I think we're seeing that across the broad space of the market today. So, we made these picks coming into today, not this morning. So, given that, I do see a little bit of dark cloud cover on the horizon on today, but I think it's a solid pick.
And Mark says, "Wow, that's an awesome chart." Absolutely, Mark.
Yeah.
I wonder if you know anything about VectorVest.
Yeah, much better chart.
All right, let's go to my last pick, which happens to be Apple. You know something? No matter what, I can't get away from Apple. Everybody knows that Apple is, to me, the best stock in the whole wide world. Keep in mind, that is just my opinion. I'm putting that out there that way. It is just my opinion. I have personally made a boatload, and watch what you say, a boatload of money on Apple over the years, and interesting where it stands right now. Apple had a hard time, something was going on. Apple had a hard time and pulled back as far as earnings was concerned, still making over $12 in earnings per share. Then turned around and started moving back up. Understanding what Apple was going through a lot of the time prior to most recently is they were putting out their streaming services. And at that time, Apple's earnings growth went to -2%. And that's because of all of the money and all of the time and all of the effort that went into putting out the streaming services. Why? Because everybody's trying to catch up to the big boy, which is Netflix. That's another story for another time. But recently, the earnings growth went from -2 to 0, which is a positive spin as far as earnings growth, because earnings is the engine that makes the stock's price grow higher. And look at that, earnings is picking up. Volume is definitely in the picture. Now, what I've done though is help you to manage the trade or trade the stock at the right time. Apple is in a channel between 327.85, where the stock has been hitting new all-time highs, and a level of support sitting at 302.72. What has just happened? Nice little rebound, and actually as a trader, could trade these levels of support and resistance, or also put on a different indicator known as stochastics or RSI to trade the overbought and the oversold levels. But just bouncing off or retracing from support or resistance gives you a great opportunity to jump on board at the right time. A bounce here, even though it's a red candle, it's an open red candle where the price started at the bottom, went up, is still going up. Today, just as Steve said, across the spectrum, a little softness on stocks across the board, but where is it retracing from? Resistance. Another good entry point would be waiting for it to break above that level of resistance before you pull the trigger on it. And if anybody's out there still holding Apple, this is again where the discipline kicks in. It's in a channel. This is where you don't panic. Now, if the stock price breaks below that level of 302.72, which is a good level of support, that's probably a good opportunity to at least take half off the table or pull the trade off the table nonetheless, and capture your profit that you probably have made from back here. But if you're not in it yet, I still like it as a hot stock, because historically the stock's price is moving up. All right, and that's my story, and I'm sticking to it. So there you go. Anybody want to add to that or take away from that or anything?
Yeah, since Glenn's sticking to it, I'd short it here. No, I'm just kidding. That's a joke. I'm just kidding. No, I agree.
I agree with Glenn. Same thing. Real close to resistance. Wait for it to break above. It's a very narrow channel. Glenn, zoom in there again.
It's about $20.
$20 on a $300 stock. That's about 8% or so. So it's a pretty narrow channel. It's tough to trade
in 2 days.
In 2 days, bouncing from support in an 8% channel when you retrace from support. Next thing you know, you're at resistance already. Yeah. So it's a little tough with this one. I'd wait for it to break above resistance. Obviously, you still have a pretty tight floor. You're not going to lose really any more than 10% if it breaks down through support. So,
yeah. And that's a key thing for me, especially if you are swing trading. Make sure that you lock in profits. Don't let your loser get away from you big, because as soon as that happens, then you start making emotional decisions about your next trade. Stay disciplined. That's why all of us are going to give you points to get in or points where to get out to manage the trade. All right, I am done. I'm going to put us back onto the watch list. All right, and I'm going to bring Gerry on I'm going to actually pass everything down. This
Wonderful.
is a good thing about this. I'm going to bring Gerry on. Gerry's going to talk about his 3 stocks, and we'll go from Gerry. Can't give him anything. Just can't take you anywhere.
Butterfingers.
Butterfingers. All right.
All right, welcome everybody. My name is Gerry D Ambrosio. I'm the manager of educational content with VectorVest. Been with the company now going on 14 years. I'm a New York transplant, moved down to Charlotte about 14 years ago, and I was thinking the other day, I'm almost here a third of my life.
Yeah.
It's a pretty long time. Been with the company again about 14 years. Just like Glenn, everything I've learned is from the VectorVest program, based on the VectorVest methodology. So happy to be here today. So the couple stocks that I chose today, PRFT, Monster, and ABUS. Okay, so let's start with PRFT. We'll just go through our basic analysis. It's undervalued, so that's a good start. Price is $51.45. We value it. We think it's worth $61.30. Relative value, excellent upside potential over the next 1 to 3 years. Really safe investment. It's in an uptrend. It's got a good comfort index rating, 1.45 VST. It's got a buy rating. Just scrolling over, 23% earnings growth rate, and our leading forecasted EPS is $2.29. So nothing at all wrong with this stock. There's not one negative aspect in terms of our analysis. Now it's flat for the day. As you guys can see, the percent change is at 0, so it hasn't moved higher than yesterday's close. So really good stock there. Monster Beverage. So this is a little bit overvalued, and somebody earlier was talking about, I think, Glenn's stock, or a few of them were overvalued, and it looks like our average price of all the stocks in the watch list is over its average value. So you might look at that and say, well, why would you buy an overvalued stock? And we say that as long as the rest of the indicators are favorable, you got RV at 1.23, RS at 1.4, it's in an uptrend, RT at 1.31, VST favorable. Now it does have a pretty low CI, but it's got a 16% earnings growth rate, and they're earning $2.26 a share. So what we say is you're paying a little bit of a premium, all right? Not that much of a premium. So now let me just jump down to the next stock, ABUS, all right? Now Monster, excellent investment, and I'll talk about the swing trading perspective on each of these stocks. But ABUS, this is more of my speculative play. It's grossly overvalued. It's only at $3.29. We think it's worth $1.16. And look at the fundamentals. Very poor, right? RV of 0.50, RS at 0.62. Look at the RT though. It's got an RT rating of 1.99. So it's in a very, very strong uptrend. Again, fundamentals really aren't there. Earnings growth rate only 3%, and they haven't quite really turned a profit yet. We're forecasting them to have an earnings per share 12 months from now at negative 96 cents. Okay, so not a great investment. That doesn't mean you can't trade it, and that's what we're going to talk about. Obviously, the swing trading aspect of all three of those. Okay, I'm going to move to our chart here. Let's start with that speculative ABUS. All right. So what I have here on the chart is what we call our Midas Touch layout. Now, for those of you that aren't VectorVest subscribers, or if you are, you're not familiar with the Midas Touch system, let me explain it really quick. We put a stop price on every stock in the database every single day. That stop price, and I've checked the box, I've added it, that's the kind of squiggly tealish line that I've just added to the chart. That is a 13-week moving average. Years and years ago, let me just give you a quick little history of the Midas Touch. Years ago, Dr. DeLito created a system called the Midas Touch to help time the gold market. We use the HUI, the HUI, it's the Gold Bugs Index, as kind of the foundation, the benchmark for the Midas Touch timing model. We figured out really quickly that it works very well on individual stocks, not only gold. So we applied it to individual stocks. And that stop price, again, is a 13-week moving average. So what we did, or what Dr. DeLito did, is he added a 10-day moving average and a 65-day moving average to that stop price. Again, the stop price is already a moving average, so it's a smoothing technique to add moving averages to a moving average. What does that do? You guys know about moving averages. They're trend indicators that they identify true direction, whether up or down. Well, when you smooth it out, you're really taking out the noise and identifying true, in this case, upward direction. What we also did was we added a 40-day moving average on our relative timing indicator, okay? So the Midas Touch system is as follows. So what we look for is we're looking at a 3-month chart. So it's a momentum, short-term swing trading system. And we look for, let me take off price for a moment. We look for the 10-day moving average to be above the 65-day moving average. Again, that's the stop price, not the price of the stock. We look for both of them to be hitting 3-month highs. We look for the 40-day moving average on RT to be above 1 and also hitting a 3-month high. If all 3 of those are true, you have a candidate for a Midas Touch trade, all right? And as you can see, all 3 are true. 10's above 65, both are hitting 3-month highs, 40-day moving average on RT also above 1 and hitting a 3-month high. So we got a candidate for the Midas Touch. Why did I pick this one today? Well, one, Mark is correct, it's up 17%. The reason why I chose it today is because even through this down move here, right, even through this pullback, the stock remained a Midas Touch stock. How do I know that? Because if I just put a cursor here, a date line, and just put my cursor, my date line on the points on the chart where the stock pulled back, did the 10 stay above the 65? Were they both hitting 3-month highs? They were. So I liked the retracement yesterday off of the 10-day moving average on the stop price. Even the day before, we had a Midas Touch stock. Day before, we had a Midas Touch stock. So momentum wasn't dissipating quite as much as you would think if you just simply looked at price, okay? And today, stock gapped up. Continuation looks like it's just at the high, maybe a half a penny off of the high today. So love this trade. It's a Midas Touch stock. It's up big today. Now I checked the news on this one. I didn't see any news. So if I just click on our news icon button up at the top, it's up 17%. And I really didn't see any news. If you guys know of any, you can chime it in. But I like to look at, oh, let me go back. I like to look at all of the buttons here. All news, press release. Got a few last month. 3 months ago, they had a earnings report about 3 months ago. Nothing really here. Arbutus announced a decision to discontinue development of inhibitor for the treatment of chronic hepatitis. That was 4 months ago, but no news today, as far as I know. If I click on our earnings button at the bottom here, they didn't release earnings today or yesterday, so it's a purely breakout trade, like the regression back towards the 10-day moving average, and a big update today. If I put volume on,
could be anticipation.
Could be anticipation of this upcoming earnings report. It could be.
Maybe.
Yeah.
Watch out for that guy.
Let's see, volume. Nice spike in volume today. Real nice spike in volume. So if I put back earnings, earnings was on November 2nd, December, January. They report this month, I believe. So it could be an anticipation of an earnings report. Okay? Anybody want to add anything to this one?
Put it on a 1-year graph.
Sure. So remember, this is my speculative play, right? So this is a $3 stock. Earnings, they're, again, losing 96 cents a share. It's moving in the right direction, but not quite above zero yet. So this is purely a speculative play. Don't love the chart long term, but it's more of a quick trade.
So I'll ask the question. You wouldn't use it as a swing trade. It is more of a speculative trade.
It's a speculative swing trade, not a long-term investment.
Okay.
For
Gotcha.
sure.
My only 2 cents here would be with the biofarms, you're always best served knowing a little bit about the pipeline. What's coming down the pipe. A lot of times you got to dig deeper, find on the corporate website when clinical trial dates are coming into view, things like that. But from the standpoint of which you presented it, you got I like it a lot more tomorrow with a higher open. How about that?
Yes, absolutely.
I like it a lot more tomorrow with an open even maybe above the high today, something like that.
Yep. And Doran says that earnings is on 2/12, a week from now. So there you go. So not too far around the corner.
Interesting with a big news hitting overall is the coronavirus. A lot of biopharmaceutical stocks are rocking and rolling.
I see Jay's writing up there, some security firm market
Upgrade.
upgrade.
Oh, great.
there you
Thank
go.
you, Jay.
There's your news.
Upgraded to $10. Thank you, Jay.
Thank you,
Whoa.
JD?
See, I would do like it tomorrow.
That's right.
You had the news real quick. You don't have to go back to it, but I thought I saw something about option activity. The stock even trades options at a $3 stock.
It does, really.
So I don't know how old that news was, but I thought I saw something about option activity on it. There it is.
Option traders expect huge
Option traders expect
moves.
huge
I don't know how old that story is.
That was last month.
Oh, there you
So
go.
now you're
that
seeing,
could-
now
that
you're
could be
seeing
a
the day
reason
and the
why.
target.
Yep, that's right.
Could be a big one, guys.
Yeah. Next one is Monster. So earnings is probably right around the corner here as well. They reported back in November. This is another Midas Touch stock. So I've stuck with the Midas Touch theme, guys. So let me take off earnings. Let me take off volume real quick. We're looking at a 3-month chart. 10-day moving average above the 65 on the stop price. Both looks like they're hitting, the Monster's not quite hitting a 3-month high. But the 40-day moving average on RT, what I like about this one is the 40-day moving average on RT just recently crossed above 1, and it's only at 1.13. The stock is at a 3-month high, okay? Good company. We saw when we looked at the viewers, if I go back to viewers, a little bit overvalued. People are willing to pay a little bit more for it. We value it about $62. It's got really good fundamentals. It's up marginally today, only 0.08%. But again, it's a nice high momentum trade hitting a new 3-month high. Now today, what time we're at? We're almost at 2:30, 3 o'clock. I'm not sure if anybody's going to be pulling the trigger today. So what I would look for is wait for the stock to settle, wait for it to close, recognize what today's high is. It's likely going to be 69.74. I'll wait till it goes above 69.74, right at 69, I'd say 85 or so. 12.5 cents higher than today's high. If it does that, momentum continues. You likely have a nice trade on your hands. Oh, I like this one too because it just recently pulled back. Now resuming its uptrend, and it's done that a number of times, right? Pulled back, new leg, pulled back. This might be the start of a new leg here.
Call to ask Gerry, do you normally use the Midas Touch approach?
Normally, yeah. To find good high momentum picks, I kind of sprinkle in a little Midas Touch stocks, which are again high momentum trades with some regression plays, some candlestick pattern, bullish candlestick pattern formation. So yeah, kind of sprinkle in a little bit of Midas Touch with some other things.
I can speak for the Jockey Club. I know I got some Jockey Club people here. How often do you guys see me in the Midas Touch list in the Jockey Club? Just about every day, right? Midas Touch is a great approach, so I applaud you for showing Midas Touch stocks.
Thank you. Yeah.
It's a good technique.
Yes, it is. All right, and the last one is PRFT. Same thing. Midas Touch at a new high today. A lot of these stocks, what has happened, guys, if I pull up the dashboard here, there's the VectorVest composite. We're either right off or just a little bit off of the session highs. Market gapped open today, pretty big, as everybody is aware. And a lot of stocks are pulling off of their session highs. Okay, so we're gonna attack this as we'll wait for the close of today. The high of today here was $52.18. 52.18, yep. So 52.30, 52.31 would be where I look to enter the trade tomorrow. Look at that 40-day moving average on RT. What I like too about these two moving averages, the 10 and the 65, both are separating. You can kind of see that separation, right? The contraction back here, the squeeze back here of the moving averages, as the stock picked up momentum, increased strength to the upside, the moving averages start to separate, and that's very bullish. That's a bullish situation when you see that. So just wait for the stock to go above today's high tomorrow before pulling the trigger. Okay, and since I'm on the Midas Touch methodology. What I want to do, guys, is talk to you a little bit about a course that we're offering to all of you folks here today. This is a course that I taught with Dr. David Paul. Dr. David Paul is our managing director for VectorVest UK, and he made the trip from the UK. We taught it actually in this training center, and if you've ever heard Dr. David Paul speak, he's a fantastic, entertaining fella. He's a great trader. He's been trading for a very long time, and he and I taught a course called the Midas Touch, Swing Trading with the Amazing Midas Touch Technique. And we are offering that course to you folks today. The website to go to is www.vectorvest.com/ST, and I know Joey had put that in the chat box there for you guys to click on. This is a home study course. This is not a live course. You can watch it at your own leisure. But the regular rate for this course is $495. We're taking $100 off, and you can order it now for $395. What we're also going to do here, excuse me, as you can see, that offer expires on February 14th. David and I, Dr. Paul and I, will be doing a live mastery session, okay? A live mastery session. We're going to do that, I believe, on March 10th or 12th. And that will be about an hour long, and we're just going to answer questions. You guys hopefully have watched it, right, by that mastery session. Bring some questions to that support session, and Dr. Paul and I will answer any questions that you have. You're also going to be getting an automated trading system as well as part of the course, okay? So fantastic course, one of my favorite courses that I taught with Dr. David Paul. So again, if you've never heard him speak before, do yourselves a favor and take that course. All right. I think Steve's up next.
Yes.
All right. I'll pass things over to Steve.
As Steve comes up, I just want to remind you, especially if you're new here, do not forget to like, comment, and subscribe, especially the comment. Let us know what you like. And so far, this is what you came here for, to get in a lot of good commentary coming out from you guys as well. But don't forget to like, comment, and subscribe.
All right, so my turn?
Yes, sir.
Let's see what we got. So hello, everybody. My name is Steve Chappell, Director of Trading Systems Development at VectorVest. Gee whiz, this October will be year 20 in the books. So almost half my life now, Jerry.
Goodness.
Almost half my life. It's been quite a ride. It's been a lot of fun. Listen, I teach everything from options to technical analysis to VectorVest Simple. Everything in between, and I owe a lot of it, of course, to Dr. DeLito, who was the founder of VectorVest. Almost everything I owe to him, actually. But I've had a lot of great mentors along the way. I've taught some technical analysis with some really good folk, Barbara Starr, Dr. Barbara Starr, Drew, and some other folks. So it's been fun, it's been challenging, and it's been very rewarding, I think is the best part. So I'm going to focus on a couple of stocks today. One that I picked a while back here in the same stock picking panel. I actually gave guidance on when to buy it. I think there might be another opportunity with it. It's called Enphase. And then we're going to get into this Teradyne. There is an inherent difference between these two stocks. And here's where the beauty of VectorVest kind of already steps in, is even looking at this list, we can get a good feel for the kind of stock that we're getting ready to look at when we really focus on just two numbers in my mind. I'm going to look at the RV and the RS relationship on an Enphase compared to a Teradyne, and there's a distinct difference. So when we look at the Enphase chart here in a little bit, I want you to frame that from the lens of an aggressive investor. Enphase has an RV of 1.64, which is extremely strong, and the reason why, that's upside potential, by the way. The reason it's so strong is because of the incredible growth that the stock has been exhibiting. In fact, I owned a good piece of it last year from January into about June. And I didn't get all of this, of course, but the stock was up about 264% at one point. Had some substantial retracement, as you might imagine, on the back of that, and has reemerged. But really what drove all of that performance was not only the fact that they're growing quickly, but they're also became profitable on a forecasted basis. So the RV is in large part a reflection of the earnings power of the company. Okay. Now, What has yet to be established is consistency of that earnings power, right? They're just breaking ground into being steadily profitable on a consistent basis. So the RS number is not very high. But again, it's because they're still on the emerging side of the space, okay? They find themselves in the solar energy space along with companies like SolarEdge and a few others. If we look at Teradyne, the contrast is very evident when we get to the safety column. So Teradyne is much more a prudent to even conservative type of a position. The nice part about this conservative type stock is the fact that it's still got some good earnings power behind it, where even from a trader perspective, there might be some short-term opportunity with something like a Teradyne, and we're going to see that as I get into the two charts. Okay, so first things first, I believe we've got the charts in the correct order. We're going to be looking at the aggressive chart first, and then we're going to be going to the more conservative buy the pullback approach. Okay, so I'm going to open those charts for you now.
Well, you have to reach, there you go, okay.
And let me get over here. All right, and so here's end phase. I've got a line drawn across end phase. This was, I believe the last time I was on the panel was sometime back in either October or November of last year. It's been a little while. And we had picked end phase, and end phase was starting to show some signs of life through here. And I said, look, if end phase can get back above this area here, that's a strong area of what was support or resistance that became support to resistance again a couple of times here. If we can just get back above there, it looks like a really terrific buying opportunity because earnings is still growing all the while. And I'm not going to get into the stories about why it sold off the highs, although there's some entertainment value there. Bottom line, a lot of folks were saying things that they probably shouldn't have said in a variety of platforms. Okay, but earnings growth persisted. It's begun to tail off a bit here now. But if $35 was achievable on 60 cents forward EPS, I certainly still feel like there may be a little juice left when we're dealing with $1 on a forecasted basis at the same price level. Maybe not quite as attractive as it has been, but still I believe some further upside potential exists here. One of the things that's happening on a current basis here is, see where I drew that line? That was resistance way back. Today you had a retest of that area even today. So as they exhibited their breakout, this is very common. It's sort of technical analysis 101. A lot of times you're going to get a retest if it's a very significant level like a new high, okay? And that's already underway here, and so far so good. The bulls came right in and met them, and we'll see where we go from here. Bottom line, I like the stock if it goes above the high for today. At some point over the next couple of days, I wouldn't stretch it beyond that. Reason I wouldn't stretch it beyond that is because earnings comes up for them on February the 18th. And you don't want to be entering into a new position just days to less than a couple of weeks before those announcements are made. So I think there's a limited opportunity here. Having said that, we get on the backside of earnings in February 18, and these guys hit it out of the park again. Ooh. This stock is going to be super attractive. So I think this is one, if you want to play things as close to the vest as possible, you just put in your watch list, you hold it till after February the 18th, and if the market's still going up, earnings is hit out of the park like they've done the last 3 times in a row, this will be a big winner. When we go to the next stock here, oh, you guys want to you guys should chime in. What am I doing? I'm going to
put it back on 1 year. And this is a stock that Steve and I have both looked at in the Jockey Club. We made money in the Jockey Club with it back in that whole May to September time period. And just like Steve said, there was a lot of yip-yapping out there, and that's a technical term. Yip-yapping, and it drove the stock's price down. But Steve is absolutely right. Even with all of the negativity that came behind the stock, look at the earnings per share. And that's why having forecasted earnings as opposed to just a solid number of what an earnings is so important. So as the stock's price is falling down, we're still forecasting earnings to go higher and higher, even through all of that doldrum. Yeah. And what is the stock doing? It's coming to fruition, and we get that a lot. Why do you look at forecasted earnings as opposed to just looking at the the earnings that are reported. That's why. That's it in a nutshell, to help you to guide you through, the stock doesn't look so good, but earnings is rising. Keep it in that watch list, and there you go. But on a 1-year graph, it's got a little bit of jaggicity in it, but that's a solid stock.
Maybe that looks better.
That's a solid stock. And looking at that relative safety, that is, again, only germane to the VectorVest software. That's a solid stock. And that's the difference between investing in it and buying it because somebody said, go buy it, and having information that the VectorVest software gives you in regards to that. We've traded that in the Jockey Club.
Yeah.
I agree with everything they said.
Roger
You
it.
could give me the hard truth.
No,
Terry.
I love it. I love it.
All right.
I love it.
I Roger it myself.
I got thick skin,
Love the next
Well,
one better.
somebody did ask, what do we hold for earnings? Joseph asked us. Wait till I go, Joe. I'll tell you what to hold through earnings. But I will real quick just say what I love to watch here is even on the short-term trades, many of you know who I am as well. I used to work on a trading desk, and the idea of support and resistance is hugely important to me as well, even in the longer term. So again, but with my trader's hat on, I put a buy stop in above the intraday high, and I put my stop in right below the resistance that Steve has leveled here. But although I will say I would not hold it through earnings, because if it gaps down, then you're out of luck. But again, putting a short-term trader's hat on, put a buy stop in at the intraday high, put a stop in at the low, and don't hold it through. At the resistance support rather, and don't hold it through earnings.
I love it.
Just a different perspective, or
No, it's
same
perfect.
perspective,
It's
I
perfect.
guess. Yeah,
It's perfect.
Yeah.
It's okay.
Just okay is okay on this.
All right,
point.
moving on. It's about to get weird. All right, now let's go. So this is a little company called Teradyne. Remember, this is more of the, believe it or not, conservative approach. They did have a sizable retracement, which I feel creates opportunity here. So if you didn't like the end phase trade, then odds are you might like something like this a little better. I've drawn out some support and resistance lines for you because I think they're both appropriate. This was an earnings announcement, by the way. In VectorVest now, you can click on the earnings tag and see that the fall was on the back of, let's just call it a less than stellar earnings report. However, the bottom line, at least as far as VectorVest is concerned, our EPS on a forecasted basis is continuing to rise. So net, there's actually something to like about what's still happening with Teradyne. I'm not sure why the 3 and 8 are on here, so I'm going to modify this just a little bit. And let me snug this little doodad up. I can't even see it.
Style.
There we go. Now we'll be able to see it. I thought.
It's on
Oh, it's on volume.
Yeah,
Oh, I
I'm
thought
sitting there,
that
I
was
was like,
price.
all right.
It took me a second.
I thought that was price.
It took me a second.
That's gonna change everything. We don't need a 40 MA of volume.
You did it.
I know. You let me do it.
This is your stock.
But you're the host.
Yeah. You're supposed to look out for your elders.
I'm older than you.
So we do have a little bit of trend change on a current basis. It's back above its 20. 20 usually serves as a pretty good floor on most high caliber stocks. It's true you tend to see a little bit of flutter below, but really what the stock is doing is kind of holding out in that zone. So it does like to go a little bit deeper than the 20 on occasion. I bet if we put maybe more like a 50 on here, it would jive even better on the low.
Actually,
Okay.
the 50 looks like a beautiful trend.
Yeah, that's where I'm going, Glenn. So we had a nice little bullish harami. Jerry will like that on the 50. We had a double kiss, 2 consecutive days. Those 2 days happened to form a pattern in the candlestick world called a bullish harami, which is a trend change pattern, meaning that the regression that the stock is in is about to come to an end or likely to. And with any confirmation at the open the next day, that being above the close of the green or the midpoint of the red, whichever one's higher, is actionable. So yesterday was actually the day to buy Teradyne, and you would have done so right out of the gate, essentially, even if you put the order in the night before. So let's consider ourselves already in. Our risk is the low of the pattern, so you'd set your stop loss below the 65.58 level. I'd put it at 65.46 or 65.45, whichever you want to go with. You can even go to the half. I've done it in Thinkorswim, but that's up to you. Somewhere in that around that level. As I said, we'd already be triggered in here, so any further upside action, I think, warrants interest here. You keep your stop right where it was. Inevitably, what we're doing is we're shooting for a target level. I don't like to shoot for these little wick highs. I'd go to real price action there of some sort. You start to get up into this territory, from a short-term perspective, trade's done, and congratulations, you had a high reward, low risk trade. So if you see this kind of thing develop in the future, this is something to take advantage of. Even now, I don't think that we're too late. You might consider elevating the stop loss. Something Jim talked about on the last graph was even snug it up below the current day low today. In this case, because I'm a little bit of a candlestick technician at this point, I keep it below the low of the pattern. It's not going down again until it hits below this low here in this case. So I leave it right where we put it. But I would, I'd look there now. It depends on objective. If you're more of a long-term investor, let me drag this back for you. Look at the earnings. There's no stronger correlation on all of the stock market than price growth with earnings, to earnings growth. And as Glenn said earlier, I love it. It's a staple line that Dr. DeLito gave to us, and that is, earnings is the engine that drives the bus. It's the engine that drives stock prices higher and higher and higher. And so that engine is still, it's still humming. We might not have the gas pedal to the metal anymore, but it's still moving pretty strong. This looks like a good opportunity in a variety of ways, whether it's short-term, swing trade, long-term. I think you're in pretty good water here, and I'm just going to leave it at that. So
yeah, and they don't announce earnings again until April.
Right.
So
because it just reported.
Just announced, so you're not going to run into upcoming earnings report. As an alternative, Steve, zoom in there, just real quick. So you got your profit target. We're looking at what, a little less than $80. Right?
I can't see it. It's 75.
Hover your mouse over.
Put your mouse on the top line.
Oh,
79.
Yeah, 79. Price is at what now?
71.
So that's an
$8.
$8 target. So what I would do as an alternative, I like where Steve's got your stop loss at the low of the pattern, but I would probably, as an alternative again, $4 below entry.
Sure.
That gives you a 2-to-1 profit to loss ratio there.
Sure.
So as an alternative, if you set a nice profit target, you got $8, don't lose more than 4. You're winning. You're making twice as much as you can stand to lose. So a little alternative there, just to raise your stop a little bit.
And a little different from my channels, which were a lot tighter.
Yeah.
It's a little easier to play this because Gerry set it up. That whole gain to loss is a much more workable here than it was with mine with the tighter channels.
Yeah.
Definitely.
I forget which stock we were looking at earlier, but it's the same pattern. It hit support, got a green, an up day. The second up day, I would have bought it either yesterday or certainly today.
Mm-hmm. Yeah.
And my stop would be at support. Mm-hmm. And I would look for that nice roughly 10% move to the upsides. Yep. And again, support plays a big part, and I love this one because relative safety plays a huge part. Great stock. We own this in one of our models in the retirement coaching group, and sold a bunch of covered calls. Finally, it was called away, and we made nice profits again. But just a great stock.
Yeah. The other thing, one last final thing, and we got to get it to you because my goodness, I'm out of here. So when you approach that target, one thing you can do, if you don't like the idea of just grabbing the 10 and going, just take half the position off, let the other half ride, and now it's all yours, bud.
All right,
I got to get out of the wrap up there.
Thank you for that,
That was
Steve.
great. No, it's
Before
great stuff.
Jim starts, again, if you like what you're seeing here, do not forget to comment, like, and subscribe. And if you think I'm sounding like a broken record, tough, get over it. What I need you to do is to comment, like, and subscribe, especially, please, comment. And Tom, thank you for doing a good job of getting those likes out there. He's working in the background with us. Now with that, There you go.
Are you done now?
Listen,
All right.
I'm about to say a couple things here. Okay.
I'm just kidding, Glenn. I'm just kidding. Okay, I'm going to change gears a little bit here. A lot of familiar names in here. For those who are not familiar in the room today, my name is Jim Penna. I'm the manager of retirement services here at VectorVest. I've been here now. June will be 13 years, and I have to say, when these guys are relating it to the fraction of their lives that they've been here, I'm a lot older than all these guys, so I'm not going to go into that. How long I've been doing this, but
I'll second that. He's older than me.
yeah, I'm older than all of them. I like the kid. I can still hit a golf ball farther than all of them, though. So
He's young at heart.
I like to, yeah, and mind. Anyway, so good to be here. Before I came to VectorVest, I talked a little bit about it. I worked on trading desks for I don't know, a good 10 or 12 years as a market maker and on a brokerage trading desk. So I love to be able to combine both this longer term look, these good quality stocks that these guys are showing, but whether it's a shorter term look at it or whether it is for your retirement type of investment, it all still falls into place. And we can see it, Glenn showed it on the watch list. We look at Fidelity National as my first stock. Look at the earnings per share, look at the movement of the stock. That is a 1 year graph that we have up there. Right, buy rated stock. Now I add dividends to the bottom. These guys don't care about dividends because they're holding the stock a lot shorter period, but we put the dividends up there. So I've got a good quality stock. I've got a stock with a relative safety number. I'm sorry, I'm going to go back to the viewers real quick just so we can look at these stocks here. For me, it was Fidelity and, whoops, I didn't want to do that.
Control button.
These were the two stocks I was looking at. So again, both, well, certainly Fidelity has a very strong relative safety number. And as everyone's talked about, when you have that relative safety number that's strong, all the other numbers I care about are going to fall into place, like growth rate, comfort index, that price growth persistence there. In this case, relative value is very strong. And we do have, let's see if we're undervalued or overvalued here. In this case, a nicely undervalued stock that we're looking at. So what I was looking at there, again, is the growth, the capital appreciation, along with the dividend information on this particular stock, which if I scroll over to the right, tells me I've got a nice dividend of $1.32. I've got a dividend yield at 2.7% on a stock that has that capital appreciation potential as well. So that's what I look for. Same thing with Alliant Energy. Now, as a utility, it's slightly overvalued. We have that area where we'll call it, what is it, about 10%, we'll call it fairly valued. So even if the stock price is a bit above the value, remember, it's a snapshot in time. And I think Gerry or Steve mentioned it. When we come back and look at these numbers, I'm much more comfortable. I will never summarily dismiss a stock simply because it's overvalued. Right. However, I will make sure that things like growth rate are where I need it to be in relative safety. If I continue to slide over, another stock, a nice 2.59% yield on the stock with a safe growing dividend. So, that's what we look for in our retirement portfolios and our retirement coaching group that we have every Tuesday. These are the kind of stocks. So when I go back to the graphs, there's really not a lot of analysis that I do here as specific or particular as we've just seen. So even if I were to turn this to a 3-month graph, I could self-impose some support here, but I'm looking at the longer term. I'm looking at strong earnings per share. I'm looking at a much longer history of these stocks, which is why I'll often put them in a 5-year graph. And again, and it's worth repeating, by the way, that as earnings grow, so too does the stock. Now, you'll see a lot of stocks, especially on these longer term graphs, these type of stocks, right? Everybody knows this is the end of 2018, right? There aren't a lot of stocks in the database that don't have this drawdown from October to whatever, December of 2018. But we see the stock has run up nicely since. So that's what we're looking at in FNF, and we come to Alliant Energy. It's a utility, an electric utility. Now this again has got the longer term history for dividends, and it's just the same pattern. And this is what we look for in our retirement stocks. Again, a nice yield, strong upward pattern, good forecasted earnings. I mean, it's just it's almost too. I don't even want to ruin it by talking over it. Just take it in for a minute. But these are the kind of stocks we like in our portfolios. And one stock, actually, it's great because, again, Teradyne was in one of our retirement models. CPRT was also a buy right. We have every Tuesday we have a retirement income portfolio that we use, and we pick these same good quality stocks, and we just sell a covered call each week. What Dr. D created a while back called the Payday Portfolio, we now call the retirement income portfolio, and these are the type of stocks that we use. 11, I think, of our last 12 trades of last year were profitable. So far this year, we've got 4 trades in place. They're unrealized gains, but they're all profitable at this point. So working very nicely again. High relative safety is still the name of the game for me. So, 5 years, the stock was a sell-rated stock over the last 5 years for about 20 minutes. So, these are the kind of stocks we're looking for. So when we look at hot stocks, again, I put my retirement hat on and it changes just a little bit on what we look for. So what I want to do just as we get ready to wind down here, I want to open up, I've opened up my program here, and I just wanted to, instead of just looking at the individual stock, because the concept is a little different in our retirement portfolios, I want to show the reason why we find these stocks, especially for the longer term, when you're looking to build and manage your portfolio. 3 core strategies: capital appreciation, income, whether it's through dividends or covered calls, and most importantly is risk management and capital preservation. So that's really what we talk about when we, in the retirement services department. So what I've done here real quick is just, I have these built in my program, and I've got 1, 3, 5, and 7-year lookbacks on both what's called the blue chip dividend payer portfolio and the ruler stocks portfolios. Ruler stocks, without going into Unisearch, I can tell you the main parameters are: number 1, the relative safety has to be at least 1.4, and the earnings growth rate has to be at least 14% per year. Earnings growth 14% per year. So those are the parameters. So right out of the gate, you're getting the very best stocks that there are, in my opinion, and this helps to show it. I use a Profit Locker Pro customized, very basic customized settings for that, and you're averaging anywhere from 38, and over the 7 years we've got just about 31%. The 3 years is at 38 and change. Now I know, I could show the 1 year, we're up over 30.5% on the 1 year, but that doesn't mean much to me because everything's up over the last year, right? We know what's happened in the market from October to current, and it's been great. But what drives me crazy is if we look at a market timing graph, again, from a retirement-minded position here, I don't want to hear about this unless you're willing to talk about this. And what do we do when this happened? Now, granted, it's a dramatic situation. I understand that. This was a violent, much shorter term, but a violent drawdown here as well. And what do we do during those periods of time? Well, in the Ultimate Retirement Solutions course, we talk about things about, again, building and managing your portfolio. So what we want to be able to do is manage our way through times like this, again, gain on that capital appreciation when it's available to us, and have those good quality dividend stocks that not only have the capital appreciation, but also pay the dividends. So for instance, I'll just skip right to the longer term, the 7-year. We're up currently 20.5% per year. That's the annualized rate of return, about 13.5% compounded. That doesn't include dividends. I've manually calculated this out, and it's over $30,000 over that time frame in dividend payouts, and that doesn't even include reinvesting the dividends. So you've got quite a return over time, and it holds up over the 3 and 5 years as well. So this is what we talk about in our retirement solution course. Those 3 main strategies that we have to focus on. And so Glenn's going to help me come to real quick here. What I just want to do is just take a moment and let you know that the Ultimate Retirement Solution course is going to launch in 9 days, 8 hours, 41 minutes, and 52 seconds. And so we're going to launch that course. There's 6 modules. We're going to save you $400 if you guys want to go to this. I don't know if we've got the link in there. I think it's just vectorvest.com/URS.
Yep.
So vectorvest.com/URS. $595 you can order now, save 40%. We're going to walk you through 6 modules, again, going over those core strategies, because finding those right stocks without a model or a process or a system, whatever you want to call it, is not going to help you when that market does turn, and believe me, it will at some point. You've got to be ready. You have to have that strategic defense system, and that's the goal of the URS course. So stocks like that is what we're looking for. In that bigger picture, we're looking for that capital appreciation. So with that, I know we're running right at the time. I'm going to go ahead and turn it back over to Glenn. Keep those high RS stocks in your crosshairs there, and you guys will be all set. All right.
Jim,
Thank you.
all I say is this.
There you go. I'm with you. Those were beautiful stocks.
Thank you.
All right. So I'm going to wrap this all up. For everyone who stayed all the way through, thank you. For those of you who left, you did. All right. Real quick, how many people out there are not subscribers to the VectorVest software? Type a me in the room. How many people in the room are not VectorVest subscribers? Type a me in the room. There's a reason why I'm going to ask that question. I'm going to get back into the software real quick, and I want to show you why what we've done is so cool, right? For lack of a better word. You notice that at the bottom of this list, these were the 10 stocks that we went over today. These are all of the 10 stocks that we went over today, and I want you to see something. As far as our indicators, which are, again, proprietary indicators to us, we have indicators like relative value, which shows you the stock's upside potential, relative safety, that shows you the stock's consistency and predictability of financial performance, relative timing, that looks at the stock's short-term price trend. Notice that the average of all of these stocks are right in line with why you are here for a swing trading session. I do see some people in the room who are brand new to the software. All of my people who are out there who are subscribers to the software, talk to these people in the room. You don't want to hear it from me, you don't want to hear it from, talk to these people in the room and let them know that this is something that they want to do. And you're going to hear from, again, the people in the room. All right, take that back a little step more. Great stocks. Put these stocks into a watch list. Now, if you're a little bit more aggressive, sort the list by RT. Find out that ENPH is at the top of the list. So now I've got these hot stocks that we can swing trade. How about finding the ones that are moving up the most? If you're looking for more of a swing trade, but still stocks that will consistently and predictably meet or exceed earnings, sort the list by relative safety. The reason why I'm going through this process is to show you the power of the software. You won't find this anyplace else. You won't find this anyplace else. And if, just like Steve said, stocks that have that good upside ability, that good upside, especially because of earnings growth. Enphase, top of the list. How about Enphase has now come up top of the list for 2 out of the 3 different force rankings? Folks, hot stock. A hot stock that really looks at something that you might really want to swing trade. All right, I'm going to answer a couple of other questions. Someone asked about Unisearch for swing trading. Gerry just talked about taking advantage of the swing trading course, and Gerry also said you're going to get an automated system with that. So that was to answer that question about searches. We do have searches in the software, but either you go to the course or you can go to the Training Tuesday. We talk about that as well. Overvalued stocks. I think it was very well put out there. Overvalued stocks mean that people are willing to pay a premium. And if they're willing to pay a premium, it's going to drive the stock's price higher. Doesn't mean that it's a bad stock. Look at the other indicators like RV, RS, and RT. Especially, like Steve said, RV and RS, because those are our fundamental indicators in the software. A good way to learn how to get out of Midas Touch stocks, when Gerry's stocks that were up there, graphs, which were your stocks, Gerry?
Yep,
Yeah.
right there.
A good way to know how to get out of a Midas touch stock, notice that we have an indicator here, MART5. Put that on. When the MART5, which is the moving average of RT, the 5-day, breaks below the 40, that's a good opportunity to get out. Look at that stock that Gerry put up. Look at the equity curve, but look at, it's not a means for you to get out of it. And what was the other stock you had? There was one, Monster. Even currently, Monster, you're still finding it. And what was the last one? This one got close, and this is where discipline kicks in. It got close, but no cigar. Close only counts in hand grenades and horseshoes. Let me tell you, hand grenades in boot camp, I did drop my hand grenade. That was pretty close. But look at that from a main,
I bought it way back
from the aspect of maintaining the trade, of managing the trade. That's a good way to get out of the stock. One other thing, gift shop. You want to know more about a gift shop? Come join me tomorrow on Trending Thursday here, right here on YouTube. We're going to talk a little bit about that.
Can I just say something real quick?
Yeah.
Because I know you're on a roll. If you have any questions, I saw it get typed in, but I just want to say, if you do have questions on the URS course, you can email me at jimp@vectorvest.com. If you have any questions on the URS course, I'd be happy to answer them. jimp@vectorvest.com. If there's a lot of people in the room right now, which I think there is, be patient with me. I will get back to you because I'm going to get a lot. But I will get back to you with any questions that you might have. I'm sorry. I had to get that in. Go
ahead. Brian, I know it says Jay. Brian, you didn't win the mug. By the way, Mary, congratulations.
Congrats,
you won
Mary.
the mug. Everybody clap. Everybody in the room clap. I want to see clap, clap, clap. Mary, you won the mug. Thank you for that.
Something
all right,
Mary.
so there we go. So that was in the way of getting out of a Midas touch stock. And again, about the gift shop, come join us tomorrow, Trending Thursday right here on YouTube. Last thing, options course. Yes, we do offer an options course. Jim is one of the instructors, especially for the options jump starter course. If you know nothing about options, Jim's going to teach you the basic options and how to use the VectorVest software for the basic options. And then him along with Ron Wheeler, we have an advanced options course called the Options Jump Starter, the Options Paycheck course. We walk you through how to put on these trades step by step, how to fix the trades when they go wrong. So that was to answer the options question. Last but not least, if you are not a subscriber to the software, go to our main website, www.vectorvest.com. And from there, let me see if I can do that. Com is what I said. Don't worry about what I said.
It's a new web.
That's enough.
I never do.
www.vectorvest.com. From here, oh, what just happened there?
Look, time is flying, people. You got to hurry up.
You gotta hurry.
Look how time just ticks away.
Did I just not do something? I did.
That's the CLOM site.
That's the clom.
www.vectorvest.com, and I think I have to take off the URS.
Yes.
There it is.
There you go.
All right. Now, you go to our main website. From here, you want more information about what we're all about, you can start a trial for $9.95. And for those of you who are sitting on the fence about the two courses that were offered here, and I hear this a lot, well, you guys sell so much, and these courses are too expensive. All right. I want to tell you this. Don't look at it as an expense. Look at it as an investment in you. You always want to hone your craft. As an investor in the market, this software is part of honing your craft. And the only way you're going to get better, no matter what you do, is to invest in yourself. You want to learn how to effectively swing trade. Gerry's got an awesome course that will help you to better learn how to swing trade. And folks, I know many out there are silver-haired. It is what it is. You want to learn how to manage your retirement because you're nervous and you're scared about what's going to happen when you retire? Let Jim help to put your mind at ease. Again, the software is unlike anything you're going to have anything out there. And Jim is going to walk you through what you need to do to generate the kind of returns that he showed you on in the software that he had and those deals. So I'm telling you, stop sitting back and saying it's too much money. Stop making excuses. People make time for what's important to them. If making money in the market is important to you, you really might want to consider taking these courses. And we are discounting them. So if you want to learn, if you really want to take your game to the next level, take advantage of it. All right. I just got off my soapbox because I just got on my soapbox. That's all right. And you got to, thank you, Joey. You got to make sure that you comment, like, and subscribe. Everybody, we loved being here. We're glad that we had as many people here as we did. Comment, like, and subscribe. Especially, stop. What? Glenn, use your indoor. I'm sorry. All right. I got on my soapbox. I'm sorry. My indoor voice says, please comment, like, and subscribe. We'd love to have comments from you. And listen, the software works. And that's all you need to know. You need more help, give us a call. We'll help you. Take the trial. $9.95 for 30 days. You like it, you keep it. You don't. That's that. All right. With that, folks, thank you very much to Jerry. Are we going to all do the Nancy? I'm not going to say anything. Listen, just strike that from what I just said. Just strike that off. Thank you to our producer in the background, Joey. Joey, say hi. Hello. There you go. I said say hi, not hello. All right. He does all of the work in the background to make sure that all of this goes off without a hitch. Thank you to my colleagues. I think that you guys got a lot out of it. Nothing is as intense as this software the way we have it. All right, you can make it as easy as you want it to be or as hard as you want it to be, but we accommodate every type of investor. So with that, adios.
Thanks, everybody.
Take care, everybody.
Ciao, au revoir. See ya.